What's up, guys? Sean Dalton here, and as the video suggests, today I'm going to be breaking down my very simple, very easy scanner. This scanner has made me over $85,000 this month. I live by it, I breathe by it, and I'm certain that some of you are going to be disappointed. It is very straightforward, very simple, nothing tricky about it. It's not a special momentum scanner that you have to pay for. It's not anything like that. It doesn't detect a moving average crossover or a certain RSI threshold. It's just simple. It's to the point. It gets the job done. There's no reason this should be overcomplicated. And I know so many of you guys overcomplicate this. Too many people think it's the tools that make you the money and not your actual decision making. At the end of the day, it's everything depends on price action. All these other, scanners and technical indicators, they don't matter. It's everything depends on price action. Price action has the final word. So, like I said, some of you guys are going to be disappointed, but it is what it is. This scanner has made me over $85,000 this month, and I'm going to keep using it. Obviously it's simple, it's effective, it works, it gets the job done, and at the end of the day, that's all I care about. So, what you're going to see on your screen is the scanner that I use in Thinkorswim, TD Ameritrade's trading platform. And you're going to see I only have two parameters there. That's all I need. So the first parameter, that first row, it says last. So that's the last price of the ticker. I keep my last price between $5 and $20. Very simple reasoning why. I am most effective and most profitable trading in these price ranges. And these price ranges offer me the best risk to reward ratio. So you guys have seen my trades in the past week. I think I've done a good job of explaining how I trade. I immediately enter a trade. I put a stop 1 or 2 cents above my entry or below my entry, depending on whether I'm going long or short. And then if I get stopped out, I lose a few bucks, or it rips, which is obviously what the goal is. The goal is to get into a stock, set a tight stop, it rips, move to break even, trail it up or down, and make a ton of money. Simple as that, guys. So the reason I like trading between 5 and 20, and preferably between like 9 and 16-ish, 7 and 16-ish, but I'll trade between 5 and 20, and it's because these stocks offer the best risk-reward ratio. So anything over 20, generally I don't like to trade in. I find that as stocks get higher in value, the spreads are bigger, so I hate trading stocks with spreads. I almost never do it. Sometimes on an inception by inception basis, I may do it, but generally speaking, I want to spread up 1 cent. That's it. Maybe 2 cents. As stocks start to rip, the spreads get bigger, but usually a 1 cent spread. I hate large spreads. 10, 12 cents. To me, that's untradeable, because if I get in at market, I'm automatically down $100 or $200. If I set a limit order, I can miss the whole move entirely. So I just stay away from those situations. So that's why I stay under 20 or under. And the reason I stay above 5, again, relates to risk reward. So for me, I trade. You guys have seen my trades, obviously. So on the small side, I'll do 2,000 shares. Sometimes you see me do less than 2,000. That's not intentional, guys. I'm always trying to get in at least at 2,000. Every once in a while, 1,500. But if you see anything less than that, that's because Thinkorswim didn't fill my order fully. And if it doesn't fill my order when I want it to fill my order, I'll cancel the rest of the order and just close out the position, because that's just the way I trade, guys. I either want my full order to be filled, or if it's not filled, I will cancel the order. So we have a partial fill, say 800 shares. I'll set a stop 1 cent above or below, and if I make a little bit of money off of it, cool. If I don't really care. It's no big deal. So like I said, you've seen my trades. They're between 2,000 to 5,000 share sizes, and trading with that kind of size, anything below $5, to me, the risk reward just doesn't make sense. And we'll look at a stock later, but a lot of these, $2, $3, $4 stocks, their true ranges during the day just aren't big enough for me to catch my interest. So I'll show you a stock later. It was one of the biggest percent losers on Friday. That was like below $4 or $5, and when you see the stock, you're going to see the actual move during the day. If I would have caught the entire move, which never happens, but hypothetically, if I would have got the perfect entry, the perfect exit, it was like a 90-cent move. So if I take 2,000 share size, I'd have to sit in the stock all day, which I hate doing. I don't want to be in one stock all day. There's too many opportunities to be stuck in one stock all day. But had I done this, I sat in this stock all day with 2,000 shares, and I got the perfect entry, the perfect exit, caught the full move, I would have made $1,800, which doesn't sound terrible, but to me, there's way more opportunities out there, and I can make way more money in other tickers. So I like to stay away from the cheaper stocks for that reason. And so that's why I trade between 5 and 20. For you guys, it may be different. So every trader has their own style, their own personality, their own edge. So when you find these things out about yourself, you need to adjust what price ranges you trade between, right? Different traders are going to trade different ways, different methods, different styles. So what works for me may not work for you guys. But with that being said, I would never suggest you pay for a scanner. That's ridiculous. You should never have to pay for a scanner. I don't care how good the scanner is. You shouldn't have to pay for it. I made $85,000 using this throughout the month. So the idea of paying for a scanner, that's ridiculous. So again, that's the price range I trade in. So for you guys, you have to learn that about yourself. What range are you most profitable in? The only way you can learn that is through experience, through practice, through making trades, through tracking your winners, tracking your losers, figuring out what you're comfortable with, those sorts of things. The second parameter is volume. So obviously volume is important. You guys have heard me talk about that before. I trade based off price action and level 2 data, and I look for volume to confirm what I'm thinking, right? So to me, price action and level 2 are the most important, followed by volume, then your technical indicators. But I like volume because generally where there's volume, there's movement. I know some stocks may trade 40 million shares and not really move because that's their average volume, but that's where that volume index comes in handy. So what I do for volume is on my pre-market scanner, I start my volume out at 150,000. So I only want to capture the stocks that have the most volume pre-market, and those stocks that come back in my results, what I do is I bring up their chart and I look at the chart. So I'm looking for specific things, which since this video is over the scanner, I'm not going to talk about, but I'm looking for specific things. And if I like the way the chart looks, I'll pull it into my watch list. If I don't, I go on to the next one. And I'm quickly able to cycle through charts because I've looked at charts for so long. I mean, I probably have thousands and thousands and thousands of hours that I've spent just looking at charts. I know what kind of charts I like, what kind of patterns I like. So I'm able to cycle through these charts very, 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 very quickly. And it helps that I only look at one time frame. So as I've said before, I only trade based off the 5-day, 5-minute chart. So I know exactly what I like to see on that chart. If I don't see it on the chart, I'm done with the ticker. I delete it, I move on to the next one. And I'm cycling through hundreds of charts a day. Hundreds of charts. And that's me finding my niche, finding what I'm good at, finding my edge, and just becoming a perfectionist in regards to that. So the thing about trading is you don't have to be a jack of all trades. You don't have to be good at everything. You just need to be really good at one thing. Really good at one thing. Capitalize on it and keep making money off of it. Don't try to be good at everything. Don't try to trade penny stocks, small cap, mid cap, large cap, $1,000 stocks, $2 stocks. You don't have to do that. You can trade specific stocks that fit your criteria, that fit what you're good at, and keep trading them over and over and over again. The truth is, I trade probably the same 25 to 30 tickers. I probably traded the same 25 to 30 tickers for the past week or two. You don't have to get cute with this stuff. So find what you're good at, become great at it, and keep doing it over and over. Make money off of it. So, like I said, with the volume, start at 150 pre-market, and As the day progresses, I continue to run my scanner. Probably every 30 minutes to an hour, I'll run the scanner again and I'll up the volume. So if I run it 30 minutes later, I'll probably up the volume by, I don't know, 50 to 100,000. If I run it an hour later, probably gonna up the volume by 150 to 200,000. And that's because I only wanna see stocks that have high volume, that have increasing volume, because I want liquidity. If I'm gonna go long or short 4,000 or 5,000 shares, I want to make sure that I can get out whenever I want to get out. I don't want to get stuck in something. So you got to have liquidity there, and that's it. That's all you need, guys. Price and volume. Those are the two most important things on the scanner. You don't need technical indicators or percentage gainers or anything like that. And the reason, I know a lot of people use the percentage gain loss function. And the reason I don't like that is because if a stock drops 7% overnight, do I really care if it only drops 7% because someone put in an order for 500 shares? They were just trying to dump their 500 shares and they were willing to sell below market value for it. Like, do I really care that it drops 7%? Probably not, because what's going to happen when it opens? It's probably going to fill the gap. And so to me, that just isn't very attractive. I don't like those kind of setups. So I only care about pre-market stocks that have a lot of volume, because generally when there's volume, there's price movement. When there's price movement, there's opportunity, and that's when I can make money as a day trader. So that's why for the most part I stay away from stocks that they may make those percentage moves overnight up or down, but they're doing it on basically no volume, which just kind of scares me. Just don't like trading those stocks. So with that being said, here in a minute or two, I'm going to show you a couple tickers to go into a little bit more depth about the daily range and why that matters and why it's important. I know too many people call out charts or see charts that they just don't have any range. Like, you know, you may make a couple $100 off of it, and that's great, guys. But if you really want to make serious money, you have to find stocks that are moving at a much faster pace, that are ripping up or down, and offer that opportunity. Too many people on YouTube with $100,000 accounts brag about making $400 in a day. Like, are you serious? You have a $100,000 account and you can only pull $400 from the market? Like, that's a joke, guys. That's honestly a joke. And I'm sure some of you know who I'm talking about. And, you know, I just can't believe people like that amass such large followings when in reality they just don't know what they're talking about. I trade with a $30,000 account. I sweep my gains out every day, and I've made 300% this month of my total account value. So if you know what you're doing, you can capitalize. And you can capitalize by just keeping it simple, keeping it straightforward. Don't overthink things. Don't become emotional. Don't get tied to trades emotionally. If it goes against you, just get out. I know for some of you guys that's a lot tougher because you're under that pattern day trading rule, and I can make a separate video about that, because a lot of people, you know, they may give out some decent advice for people who are over that threshold, but for people who are under it, you have a totally different set of rules. The game's a lot more difficult for you than it is for me, because you can't get out whenever you want like I can. And I know that struggle. I've been there before. I used to have an account that only had a few $1,000s in it. So I can make a separate video if anyone's interested over that, how to navigate through that, because that is very difficult. So understand the difficulties there, but once you get over that threshold, that $25,000 requirement, I think you'll find that trading becomes a little bit easier, because you are able to get in and get out as much as you want throughout the day, and you don't have to hold overnight and sit through that uncertainty and sit through those losses. Because obviously I never hold overnight. That's one of my biggest rules, especially in this market, because you never know how it's going to open the next morning. So you know, with that being said, let's get into one of these tickers, guys. Give me just a second here. So I think the first one I'm going to show you is Starwood. So Starwood's a stock I made about, I don't know, maybe $10,000 off of last week. I'm going to show you the 10-day, 30-minute chart. The only reason I have that one popped up is just so you can see, this stock has consistently dropped throughout the week. So that's why I carried over on my watch list, which I'll talk about in a second. But look at the true range, guys. Like, look at Friday. I mean, this thing jumped up $3, down $2, up $2, down $3. This is what you want. This is a very nice daily range. It offers great opportunity to make money. That's what you want to see. Stocks that are moving up and down a few dollars a day. So, you can go long, you can go short, whatever your preference. And now I'm going to show you a stock that I don't like. So, just pulling up a chart here, and what you're going to see is this stock. It's a cheap stock. Like I said, I stay away from cheap stocks because the risk reward just doesn't make sense. Look at this stock. If I would have captured the entire move, it's going to pop up here in a second. If I would have captured the entire move, that's 90 cents. I would have had to have held it all day to make maybe $1,800. And as you guys saw last week, I can make $15,000 or $16,000 in a day. Why am I going to hold a ticker all day just to make $1,800? It just doesn't make sense. And that's if I capture the full move, which no one ever does. If they say they do, they're lying. Don't believe it. So this is why I stay away from cheaper stocks. The true daily range just isn't as attractive. And I'm going to show another stock I liked, a little bit on the cheaper side, $6.63 it closed at, but made a nice move during the day, up $7 to $12. So some good daily range there. Briefly, I want to go over the watch list on the left-hand side while I show you the stock. So the watch list, I carried over from day to day. I add or delete stocks. The reason I carried over is because if a stock moved 40% in the previous day, chances are it's going to either continue that trend or it's going to, have a pullback or maybe make a bear flag, something of that sort. So it's probably going to move the next day. So if it's going to move the next day, if I think it's going to move, I want to keep it in my watch list because if it's going to move the next day, there's opportunity there to make more money off the same ticker. So that's what I do. I cycle through these tickers every day on my watch list. I'm constantly updating the charts, looking at them throughout the day. As I've said before, I sit at my computer from 9:30 to 4, just looking at charts, making trades. So I'm constantly in the know of whether or not this chart's moving, if it's choppy, what the deal is with it. And then at the end of the week, I'll go through, delete some off here. Obviously, I don't want 50 tickers on my chart or 50 tickers on my watch list, but 20 to 30 is a solid number. So yeah, guys, that's it. That's the simple and effective scanner. Again, it's made me $85,000 this month. And, I encourage you guys to give it a try. Don't overthink things. Keep it simple. Keep it straightforward. And trade based off price action. Nothing else. So that's going to conclude this video, guys. If you liked it, give it a thumbs up and subscribe. And thanks for watching.